economy does still remain under some significant pressure, warning really against too much optimism coming through these markets. But we clearly have seen some indication that the pace of decline in the US has started to slow. Overall, what did you make of his comments, and what's your view of the US economy right now?
I think that Obama is trying to inject optimism among consumers, because they are a necessary part of any strategy to bring the US economy up from its current recession. Obviously, he has to maintain some cautiousness because there are so many risk factors ahead, in particular the bank stress tests. And we heard from the Obama team about that topic during the weekend as well, including suggestions that some banks will be deemed necessary to have recapitalization, although it doesn't seem that they will need more than the TARP funds left in the Treasury pocket currently are still there. So it seems that Obama is sort of guiding us to expect that no major disruption will occur and that there will be a gradual improvement in financial and economic conditions. I think that there are still doubts among investors that this is indeed going to be the case, and I expect that stress tests may result in a short-term decline in market sentiment and equity indices worldwide.
Dariusz, is this why you believe that we're seeing a little bit of weakness on these markets today? I mean, I know that you believe a short-term correction is probably likely, but I believe in your research you suggested that a trigger in form of, I guess, major earnings or else a data announcement would be needed for this correction.
Indeed, the trend has been upwards for several weeks, and it has been strong enough that there must be a major factor pulling sentiment downwards for the overall trend to change. However, there is so much uncertainty in terms either of earnings or macroeconomic indicators, as well as the question mark over the bank stress tests, that I believe there is high enough chance that we will see a major negative surprise, and then the correction will occur sometime in the near term.
And Dariusz, in terms of strategy and trading plans, you're looking at least in the very short term, going into a short-term risk aversion trade. So what does this, what essentially is the detail of this strategy?
Yes, I believe that in the short run, people who've been making profits on the risk appetite move in the market should be taking some of their money off the table, in particular in terms of the equity and commodity markets. To some degree, maybe also corporate credit, but the prices there haven't risen that much. On the other hand, I believe that the sovereign developed issuer government debt will be a key beneficiary in the near term, in particular the US Treasury market. And in terms of the currencies, the dollar and the yen are continuing to gain ground against other majors.
All right. Now, some comments that we heard from the IMF overnight as well, or over the weekend, I should say, was that the IMF would cut its global economic forecast in the coming week. A recovery could start as soon as next year, but also the risk of a deflation to the economy is more of a threat to inflation. I mean, do you agree with those sort of comments?
I believe that it is appropriate for the IMF to continue to lower its global growth forecast because conditions remain very severe. However, when it comes to the risk of deflation, I don't think it's really as high as the IMF is saying. In fact, when you look at the trends in commodity prices and the medium-term outlook for both asset prices and the global economy, which should be recovering in the second half of this year, I don't think deflation is a major risk, and I believe that investors will continue to reposition themselves to seek protection against inflation in the longer term, which is a necessary result of the very loose monetary and fiscal policy we are seeing right now worldwide.
Absolutely. I think I've had a few analysts tell me that, actually. Dariusz, just briefly, before we go, just before the break, we were talking about Beijing pledging more measures to help Hong Kong. I mean, how significant are these measures, I guess, in the scheme of the global recovery?
I believe that the move to allow UN-denominated bonds to be issued in Hong Kong will provide only incremental support to the city-state, in particular to its financial services industry. And it's more important to see, for example, Chinese buyers moving back into the local real estate market, which is much more significant for the overall demand in Hong Kong.
All right. Dariusz, thank you so much for your time today. Thanks for sharing your thoughts with us.
Thank you for having me.
Dariusz Kowalczyk.